if your money is sitting in cash or a traditional savings account, you're actually losing money after inflation, and you should seriously look into the second strategy to make your money work for you, which is private equity real estate. It's not just about how hard you work, but how hard your money works for you. The difference between financial struggle and financial freedom often comes down to one crucial skill: knowing how to put your money to work. Welcome back to our channel, folks. I'm Dave Seymour, and today we're diving into a topic that could change your financial future: how to make your money work for you. This video is packed with actionable insights that can help you build wealth with more efficiency. There's a saying that separates the financially savvy from the rest: don't work for money, make money work for you. But what does that really mean? And more importantly, how can you put it into practice? At its core, this concept is about shifting from a purely active income model where you trade time for money to where your money generates additional income with minimal outgoing effort from you. Instead of your money sitting idle in a low-interest savings account, you're putting it to work in ways that can generate additional income or grow your wealth over time. This doesn't mean you'll never have to work again. Rather, it's about creating systems and making smart choices that allow your money to grow and generate returns even while you sleep. Before you can put your money to work, you need to have money to work with. That's where budgeting and saving comes in. Start by creating a detailed budget. Track your monthly income and expenses, and you might be surprised where your money is actually going. Look for areas where you can cut back, maybe that unused gym membership or those frequent takeout meals. Once you've optimized your spending, set up automatic savings. Pay yourself first by automatically transferring a portion of your income to a savings account as soon as you get paid. Aim to save at least 20% of your income, but start with whatever you can manage consistently. Remember, saving isn't just about cutting costs, it's about redirecting your money towards your financial goals. Every dollar you save is a dollar you can put to work. Now, let's explore 6 key strategies to make your money work harder for you. The first, high-yield savings accounts. Let's start with something simple yet often overlooked: high-yield savings accounts. While traditional saving accounts offer interest rates that barely keep up with inflation, high-yield accounts can offer significantly higher rates. Instead of letting your cash sit idle in a checking account or a low-interest savings account, move it to a high-yield savings account. These accounts, often offered by online banks, can offer interest rates 5 times higher than the national average. Now, for an example, if you have $10,000 in savings, the difference between 1% interest rate and a 5% interest rate is $400 a year. That's free money you're earning just by being smart about where you park your cash. Although this is not the best strategy to grow your wealth, it's a good starting point to try to keep up with the current inflation rate. In fact, if your money is sitting in cash or a traditional savings account, you're actually losing money after inflation, and you should seriously look into the second strategy to make your money work for you, which is private equity real estate. Now, if you like the idea of beating inflation, investing in real estate, minimizing your taxes, and protecting your assets from the impending stock market collapse, but you don't want the hassle of being a landlord, private equity real estate may be your answer. Private equity real estate companies own, operate, or finance income-producing real estate assets, and that's exactly what we do. When you invest in private equity real estate, you're essentially buying a slice of a large real estate portfolio. We do all the work, and you simply put your money to work for you. Plus, you get the benefits of real estate investing, like potential appreciation and inflation hedging, without the headaches of property management. Private equity real estate provides a much safer alternative to the stock market because income-producing real estate, specifically multifamily properties, provide a natural hedge against inflation with protection against stock market crashes. Now, if you're interested in learning more about private equity real estate, you can grab our Ultimate Alternative Investment Guide at uaiguide.com. You can also find the link in the description below. Now, our third strategy is perhaps the simplest yet. However, potentially one of the most powerful, investing in index funds. Now, an index fund is a type of mutual fund or exchange traded fund, EFT, designed to track a specific market index like the S&P 500. Here's why index funds are so appealing for making your money work for you. First, they offer broad diversification. When you buy an S&P 500 index fund, you're essentially investing in 500 of the largest US companies all at one time. Second, they have low fees. Because index funds are passively managed, they simply track an index rather than trying to beat the market. They typically have much lower fees than actively managed funds. Third, they've historically provided solid returns. Now, while past performances doesn't guarantee future results, index funds tracking the broad market have provided returns that have outpaced inflation and many actively managed funds over the long term. The strategy here is simple. Regularly invest in a diversified portfolio of index funds, reinvest your dividends, and let compound interest work its magic over time. For example, if you invested $10,000 in an S&P 500 index fund and contributed an additional $500 per month, assuming the average annual return of 7%, which is below the historical average, after 30 years, you'd have over $750,000. Now, this is a great alternative if your capital is invested in 401ks and/or mutual funds, as those vehicles come with extremely high fees, which rob you of most of the growth of your capital. While index funds are a much better alternative to mutual funds, they do come with risks, as they will drop in value almost as the stock market drops in value. Now, our fourth strategy takes the exchange-traded fund to another level by guaranteeing your money will never go down in value, yet still increase in value as the stock market increases in value. Said another way, it gives us great upside potential during its growth phase and also provides a guaranteed lifetime income on the down road. It's called the ultimate income solution. Your deposits remain entirely in your control. You're not giving up access to your cash. It offers the potential for significantly higher annual returns than any other safe money solution such as a CD, bond, or even high yield savings accounts. It provides a 100% guarantee of your principal, meaning you can't lose money. The growth is tax deferred, providing maximum compounded growth for the expansion of your freedom fund. It provides income insurance, or a guaranteed income for life, when you select an optional income rider. Now, as I alluded to earlier, these structures offer upside without the downside, gains with no losses. I know what you're thinking, but Dave, what happens if the market goes down? Even if the market index drops, even if it's in one of those nasty 20%, 30%, or 50% drawdown years, you don't lose a dime. You get to avoid all the bad years and only participate in the up years of the market index. To learn more about the Ultimate Income Solution, visit ultimateincomesolution.com. Now, our fifth strategy to make your money work for you is to create a business. Now, this strategy might seem counterintuitive when you're talking about making money work for you. After all, starting a business often requires a lot of work up front. But hear me out. The goal here is to create a business that can eventually run without your constant input. What's often called a passive income business. This could be an online business selling digital products, a blog monetized through advertising and affiliate marketing, or a brick and mortar business with a team to handle day-to-day operations. Now, the key to focus is on the building systems part that allow the business to operate without your constant attention. This might involve hiring employees, automating certain tasks, or creating products that could be sold repeatedly without the additional work. For example, consider an ebook author. They might spend months writing a book, but once it's published, it can continue to generate sales for years with minimal additional effort. And companies like Amazon, well, they do all the marketing, selling, and fulfillment for you. And now with the advent of AI writing tools, the ebook has become a significant passive income business. Yeah, creating a successful business takes time and effort, but if done right, it can provide a steady stream of income that doesn't require trading your time for money on an ongoing basis. Now, if you're interested in exploring how to start an AI-powered ebook publishing company, visit startaibusiness.com. Our sixth strategy, it's rental properties. Real estate remains one of the most popular ways to generate passive income. When you buy a rental property, you're essentially purchasing an asset that can provide regular cash flow in the form of rent payments. The basic idea is that you purchase a property, find tenants, and collect rent each month. If done right, the rent should cover your mortgage payments, property taxes, insurance, and maintenance costs with some left over. The beauty of this strategy is threefold. First, you're building equity in a property while someone else, your tenant, pays the mortgage. Second, you benefit from any appreciation in the property's value over time. And third, real estate can serve as a hedge against inflation, as rents and property values tend to increase with the overall cost of living. Of course, being a landlord isn't entirely passive, is it? You'll need to find and vet tenants, handle maintenance issues, and deal with the occasional emergency. The downside is there is a significant risk with renting houses because if the tenant leaves in the middle of the night, you got zero income and you're still stuck paying all the expenses with no income at all. Plus, the tenant most likely left you with a hefty amount of repairs that you'll need to make. This is why we recommend private equity real estate, where we, the professionals with over 340 million in real estate assets, we do all the work. We do it for you so you can collect true passive income, wealth appreciation, minimize your income taxes, and grow your wealth in the fastest and safest way compared to any other public investment like mutual funds or stocks. Now, if you're interested in learning more about private equity real estate, grab a copy of our Ultimate Alternative Investment Guide at uaiguide.com. Making your money work for you is about more than just earning. It's about strategically using your resources to build long-term wealth. It's about transforming your relationships with money from a passive receiver to an active manager. Remember, the key to financial success isn't just about how much you earn, but how smartly you put the money to work. It's about creating multiple streams of income, leveraging the power of compound interest, and thinking long term. Also, keep in mind that these strategies aren't mutually exclusive. Many successful investors use a combination of these approaches to build wealth and generate passive income. The journey to financial freedom is a marathon. It's not a sprint. It requires patience, consistency, and a willingness to learn and adapt. But with the right strategies and mindset, you can put your money to work and build a more secure financial future. I would love to hear from you. Hear about what strategies you are using to make your money work for you, what challenges you faced, and how you overcame them. Share your experience in the comments below. And if you found this video helpful, please give it a thumbs up, subscribe to our channel for more insights on personal finance and wealth building. And don't forget to hit that notification bell so you never miss a new video. Now, until next time, here's to putting your money to work and building the financial future you deserve. I'm Dave Seymour with Legacy Alliance. I'll see you on the next one, which should be showing up right here, right now. Take care.